Hello, everyone. I'm Sharon Epperson, CNBC Senior Personal Finance Correspondent. This pandemic has brought challenges to all of us, especially the nation's teachers. And when I think of a word to describe the teachers who are with our children day after day, it is adaptability. They have had to transition from remote learning to in-person but socially distanced learning, and then back again, and go back and forth every time there's a COVID outbreak or an exposure risk in their schools. When you think about the fact that this week is National Teacher Appreciation Week, what better time to talk to the nation's teachers and to hear from them what's on their mind about financial education? We wanted to open up a virtual teachers lounge for teachers to ask their own questions live and consult with financial experts about what's on their minds and what they want to convey to their students as well. And I have to say, I love teachers. My mother was an elementary school teacher for nearly 20 years in Pittsburgh, Pennsylvania. And in talking to her today about what she remembers about teaching, because she's retired many years ago, she said she really loved teaching the lesson about needs versus wants. Needs and wants, how do you distinguish them? Key example she would use: you need food, you want candy. It's very simple. It's a decision that you have to make. And helping children, even 5 and 6-year-olds, make good decisions, well, that's what financial education is all about. Obviously, I'm very excited.
And build good lives. And it's our nation's teachers, their dedication and commitment every day, as I saw with my mom, a second grade teacher, who help our children to do just that. C is so honored to support all teachers, the 50,000 each year we train online and off, the over 800,000 who access our free resources on EconEdLink, and you all here today. Thanks so much to everyone.
Thank you, Nan. Many of the teachers here already probably know Tim Ranzetta, who is the co-founder of Next Gen Personal Finance. And Tim, again, thrilled to be here with you. Thanks for being here.
Sharon, thank you, and thanks to the CNBC team for producing this event and for using your platform to really highlight how access to financial education is truly a social justice issue. You've created this great opportunity during Teacher Appreciation Week to shine a light on the amazing resilience and commitment of personal finance educators across the country. These educators have inspired the team at NGPF every day by overcoming so many challenges this school year to deliver these essential lessons to students. We're all excited to answer your questions today.
Excellent. And you have a lot of questions to answer. We have a wonderful panel, an esteemed panel joining us today, answering questions live for the next 60 minutes. So let's meet them right now. Tiffany Aliche is the Budgetnista, and she's helped over 1 million women around the world save more than $250 million and pay off over $200 million in debt. She is also the author of Get Good with Money. You see it, the cover right there. And she's the host of the Brown Ambition podcast, one of my absolute favorites. Dr. Brad Klontz is a financial psychologist. He is a certified financial planner and co-author of the book Money Mammoth. Dr. Klontz is also a member of the CNBC Financial Wellness Advisory Board, and we're always glad to have you, Dr. Klontz. Dan Otter is the executive director of 403B Wise, a nonprofit organization that educates teachers about their retirement plan options. He is also the author of Teach and Retire Rich. He is our 403B guru today. And Lori Schock is the director of the Securities and Exchange Commission's Office of Investor Education and Advocacy. Lori's a leading expert on investor protection issues and advises the SEC on all matters involving retail investors. That's you and me. And we want to thank all of our panelists for being part of today's event and for joining us in this very special Teachers Lounge. I have my lesson plan. I'm going to try to follow it as closely as possible and let our special class begin right now with Yamisha Bell, who is currently a 4th-year special education teacher at Gotham Collaborative High School in the Bronx. Her love for personal finance grew from her own journey of paying $27,000 in debt over 7 months. Congratulations to you on that, Misha. She is currently working with her school to create a standalone personal finance class. Yamisha, what's your question?
Well, first, I would just want to say thank you all so much for being here today. It means so much to all of us here as teachers. And also, of course, happy Teacher Appreciation Week to all my other teachers who are tuning in. Woo! With that being said, Teachers work so hard to ensure the success for our students. What are ways that we can ensure our financial success? And that includes building wealth and making sure we have a dignified retirement.
Dan, that sounds like a question from you, from one of the most energetic teachers I've ever met. I'm sure every student wants to be in your class, Yamisha. Dan, what's your answer for Yamisha?
Well, I agree with that. And what a great question to start this off with. My advice is simple, but it's not easy. Save as much as you can as soon as you can. And one of the best ways to do that is through the two 401k like supplemental retirement plans available to teachers, the 403B and the 457B. When used correctly, they can be powerful wealth building tools.
Dan, can I ask you one quick follow-up? And I know we're going to get into it through the course of this session, but if there are one or two things that you could tell teachers is different from what they may hear about other plans like a 401k, what is the main difference between the 403b and the 401k?
That's an excellent follow-up question. Yeah, there's really two main differences. The one is that your employer is going to take a hands-off approach, unlike the 401k world. And so what happens is the void gets filled by these sales agents that come into teacher staff lounges and they hit them up on the internet through email, spam email. And then the second thing is the investment choices are generally going to be a lot more expensive in 403b plans than 401k plans. Although I will say the 457b tend to have better, lower cost investment choices than the 403b.
We're going to get into a lot more detail on that, I know, throughout this hour. But Yamisha, I thank you for kicking us off with that question. And I look forward to maybe sitting in on one of your classes one day. Thanks for being here. Now we want to meet Molly Tyson. She's coming from Lorain, Ohio. And before she became a high school teacher, Molly worked in higher education and was program manager for the Goldman Sachs 10,000 Small Business Program in Cleveland. Molly now teaches personal finance, business, and math at Lorain High School. And Molly, go ahead with your question.
Thank you so much. And hello from the Buckeye State. I am curious for your panelists to know how they feel K through 12 financial literacy education can help to break the cycle of poverty and bolster the middle class.
Lori, that sounds like a policy question, a question that I'm sure you're thinking about quite a lot. What would you say to Molly?
You know, Molly, I have to agree with you. Personal financial education is the cornerstone to breaking the poverty cycle. You know, the views I express here today are mine and mine alone and don't necessarily represent that of the SEC. That's a disclaimer I have to give. But at the end of the day, you know, you provide this information to your students through your personal finance classes. And that may be the only place that they hear this information because a lot of families don't talk about money at home. And as you know, money can work for you, but it can also work against you. There are some pitfalls out there that people can fall into if they don't know the rules of the road. So this is an opportunity for students and young people to get started on the right foot and on the path to financial success. And once they get that first job, if they're able to save money, build a retirement fund, build an emergency fund as well, that they'll be able to have that financial success, not only for themselves, but for their family and move into the middle class for generations to come. Thank you for your question.
Thank you.
Yeah, thanks, Molly. Very important question there. I want to move on to Catherine Turso, who teaches finance at NYC iSchool, students in various grades that she's teaching. And I want to thank you for joining us today, Catherine. What's your question?
Hi, thank you for having me today. My high school students right now are really excited about trying to grow their wealth through investing. But they're coming in every day with these stories that they've been hearing on social media from their friends about Forex programs that they can get involved in, or making wealth through investing in Robinhood. I want to keep their energy and enthusiasm up, but I also want to make sure they have good financial advice for their futures. So how would you talk to teenagers about these investment opportunities that they're seeing on social media?
Well, listen, that sounds like a great question for Dr. Klontz. Brad, you know, I have an 18-year-old myself and have gone through exactly what Catherine is talking about, trying to talk sense into him about what he should be focused on. But now I can use Dr. Klontz's advice to add to that. So what would you say? Because there's a big concern about social media and mental health overall, and you have a significant social media presence.
I do. And Catherine, you were right on using the air quotes around opportunities. And I don't know if these cell phones are making us happy or more sad in our lives, but we're wired to have this fear of missing out. We're just naturally wired to do this. We're wired to do everything wrong when it comes to money, which is a theme that I hope to talk about a lot today. Is we're all crazy when it comes to money, and so we have this essentially a tribal brain, and we're really much connected to what everyone else is doing around us. And so I think one of the most powerful things is to educate our students around this massive vulnerability we have to be feeling bad all the time and to fear that we're missing out, which leads to terrible, self-destructive financial decisions.
Thank you.
The race to be like everyone else and lose money like those other people. That's what we don't want them to do. Thank you so much for your question. Joey Running is a business educator at the high school and community college levels in Albany, Oregon. And she is currently serving as the president of the Oregon Business Education Association and a volunteer with the Oregon Council for Economic Education. Joey, thank you for joining us from all the way in Oregon. What is your question?
Hello from the Wild Wild West. I'm hoping you can help me with some unique ideas for my female students and the need to plan ahead. They earn less on the dollar and live longer than their male counterparts. I want them to understand the importance of the numbers and their future selves.
Absolutely. Tiffany, this is something you deal with all the time on Brown Ambition and all of your platforms. What would you say for Joey to do?
Hi, Joey. As a former teacher and someone who is a bonus mom of a precocious 14-year-old young lady, one of the things I do with her, I call her Supergirl, is that I try to make the lessons real. So just this summer, she started her own business. So you can possibly have a classroom business to show young women in the classroom that it's possible that they can make money outside of traditional avenues. Also, too, teaching them how to invest, but teaching them in a way that's fun and exciting. So Supergirl got her first pair of Crocs and she was excited, and she explained that there was a line at the mall when she went to get it. And she said they're pretty popular. And I was like, when things are popular, sometimes they might have a stock that might be currently going up. And she was super excited to go online to see that that was indeed true. We use something called Sink or Swim. It's a great tool that you can use where you don't actually have to put any money into. You can play the stock market online. So making it real for your girls, teaching them how to manage their money and to earn more outside of traditional avenues.
I love that. That's great. Terrific advice. Thank you, Tiffany. Next, we have Daria Hall from Charlotte, North Carolina. She is currently teaching world history and IB Civics and Economics at Harding University High School, and she'll be teaching economics and personal finance in the fall. We would also like to congratulate you, Daria, on being named Teacher of the Year this year at your school. Congratulations, and go ahead with your question.
Well, thank you for that, and greetings from the Queen City. Thank you again for having me as well. My question to the panel is, what do you think is the most important financial concept or rule that our scholars should know before they graduate high school?
Tiffany, let's have you start that one off. What is the number one financial rule that they need to know?
So I think the number one financial rule that students need to know is that they have more power than they think. That they are capable of being in charge of their financial life, and that the sooner they start, the better.
That's great and empowering advice. Appreciate that. And Brad, what do you think?
I got to say, pay yourself first. And I would like the set point to be, what percentage of every dollar you make are you going to save and invest? Like, just that is the start point. Real quick math, if people save $5 a day, invested it at 10% return, which is the S&P 500, everyone's a millionaire in 42 years. And so if I could just instill this pay yourself first philosophy, it'll change the world.
Absolutely. Excellent. Excellent. Lori, what would you say?
I've got to talk about the power of compound interest. This is where your money makes money, and then including those returns, it makes more money. So it has a snowball effect. And this is where, compound interest can work for you or against you. So, if you have investing and you're investing, you make that 10% that Dan was talking about, that's working for you. However, if you have, say, credit card debt, then that's where interest can work against you and you're paying someone. You want to be the person who's being paid. So the power of compound interest gets you paid.
Love that one. Love it. Dan, what would you say?
I want to echo that last point about the power of compound interest. I like to think of it this way. It's your best friend when you're a saver, and it is your worst enemy when you're a debtor.
Absolutely, absolutely. And so many people don't really understand that concept of the power of compounding, even as adults. So I think it's important that we make sure the children know it, and students know it, but also they can encourage their parents to follow that as well. Daria, thank you for your question and congratulations again.
Oh, thank you.
All right. We want to move on to Rob Phelan, who is a high school math and personal finance teacher in Frederick County, Maryland. Outside of school, Rob is the owner of The Simple Startup, a workbook and a course for young entrepreneurs to learn how to start their first business. He's also publishing a children's book this summer called M is for Money. Rob has a question for the panel today about teachers and retirement planning. Rob?
Sharon, thank you so much for having me on, and thank you all the panelists for giving this great opportunity to teachers to get some questions answered. My question is, when I talk to my colleagues, they want to know how much should I be saving if I've got a pension as well. So a lot of teachers have pensions, not all, but if you do have one, how much should you be saving on top of that to prepare for retirement?
Dan, that seems like a real rarity in this day and age to have a pension. If you're a teacher and you're able to, you have that, that's great to just start off with. But what would be your answer to Rob's question?
Well, thanks for the question, Rob. I think number one, first, figure out how much are you going to need to live to retire on, and then find out what will your pension and Social Security yield. Now, your pension agency will be able to help you with that calculation, and then Social Security has online tools that can help you. And I want to point something out. Teachers in 12 states do not participate in Social Security, so it's important to know that. Once you know what your expenses are in retirement, and then once you know what you can expect to get from your pension and maybe Social Security, is that going to be enough to live on? I don't think it is. So you're going to want to save more. And one broad rule of thumb is that for every $100,000 that you have saved, that can yield about $300 a month in retirement. So if there's about a $900 a month shortfall between your pension, what you expect to get from that, and your expenses, you're going to need to save about $300,000. And I think this is such an important question, but it's also highly individualized. So you're going to have to adjust accordingly.
Yeah, and it's really important to do that homework and look at Social Security. You know, they used to send you a statement and give you an idea of what you would get. Now you have to go to the website and try to calculate yourself, but it's good because it gives you skin in the game to make sure that you're paying attention to where you're going to stand perhaps when you retire. So really important to do that. Thank you, Dan, for that. And I want to go ahead now to Georgia, where we have an 8th grade social studies teacher. Personal finance and financial education is in every class in my book. So I love that you're teaching this. Tamara Gordon is joining us from Centennial Academy. Tamara, what is your question for the panel?
Thank you, Sharon. I'm so grateful for this opportunity. While this isn't the case for all of the parents of the children that I teach, some parents think that teaching personal financial literacy is nonsense. How can I overcome that?
Now, Tiffany, I know we've talked about this. You have been an advocate for financial education as a former teacher and really involved in making sure it happened at a new level in New Jersey schools. What would be your advice here for Tamara?
So Tamara, I totally know where you're coming from. I was a school teacher for 10 years in Newark, New Jersey, and that definitely was some of the pushback that I used to receive. So one of the things I did was to invite the parents into the classroom when we taught financial education. Sometimes you're getting that resistance because honestly, parents feel ashamed about where they are. They feel ashamed about not knowing. So I would gamify financial education for my students, where we would play games where they got to assume adult personas and pay bills with fake Monopoly money. And those days that we played those games, we would invite parents to come in as well to realize that what your child is learning, also you too can learn in a way that allows you to maintain your dignity. So invite those parents into the classroom.
Oh, I love that. That's a great idea. That's a great idea, Tiffany. Thank you so much. And thank you for your question. I appreciate that. We're moving on to Florida now, where Aaron Standish teaches K through 12 financial. He's actually the financial literacy coordinator for all of K through 12 for the school district in Palm Beach County. And he's here with a question about personal finance curriculum and standards. Aaron, what is your question?
Thank you. And hello from sunny South Florida. And a big thank you to the panel for taking our questions today. So there are states that require instruction and they have adopted personal finance standards, yet these states or schools rarely have formally adopted personal finance curriculum. Teachers are then overwhelmed with having to pick out their own resources for instruction, and they don't always know the best place to turn. So in your opinion, how do teachers best determine what curriculum resources to use to teach personal finance material with their students?
You know, this is how much I love doing this, Aaron. I enjoyed going through this list of states with Tim Ranzetta from Next Gen Personal Finance, because this individual keeps this on the top of his head. It's amazing. He knows what states are doing, where they are. It's fantastic. So Tim, this is your question. This is for you. What's your answer?
Well, I got to start by thanking Aaron, because he just does phenomenal work in Palm Beach County. He's one of the few large districts in this country that have an Aaron, and he's just done such a phenomenal job creating a culture of personal finance there. So I would start answering the question with the recognition that the best way to learn about this is to learn from your peers. And I know many teachers are the only ones in the building teaching the subject. So there's a group out there called Finlit Fanatics that we started several years ago. And there's close to 6,000 educators on it today, sharing resources, best practices, creative engagement strategies. So use that as a starting point. Take advantage of the experience, the wisdom of crowds that exists. And then I think you look for leading nonprofits in the sector who have both comprehensive curriculum as well as professional development. I think that's a piece we need to see more investment from the sector, because it's not enough to throw resources out there or curriculum, but also to work with teachers on how to implement it. So just to name a few, I'm a little bit biased here, Next Gen Personal Finance, but also Council for Economic Education, Take Charge Today, and if you're looking for an online curriculum, Foolproof.
Excellent, excellent. And Tim, is it okay to use several different curriculum, or do you need to stick with one for one semester? What is the best way to do that?
Yeah, I think we find teachers like mixing and matching, and I think their students do also. I think there is the variety element and kind of doing the same thing day after day. I think what you find experienced teachers use is they plug in different resources from different curriculum providers. Great question.
Thank you. Thank you, Tim. Thank you, Aaron. Glad you're with us, and thanks for the work you're doing there in Palm Beach County. Maggie Woltman is going to join us now from Livingston, New Jersey, and she teaches personal finance and entrepreneurship at Livingston High School. Today, she's curious about researching new investment opportunities. Maggie, what's your question?
Hello from Jersey. Happy Teacher Appreciation Week and happy May to everybody. Okay, so my knowledge and expertise comes from tried and true experience, like how to save, budget, borrow, and invest. And many of my resources come from the panelists and experts here. So thank you for all of that. Many students, my students across America, are so interested and wanted to discuss all about the digital currencies and NFTs. What are strategies for educators like me who actually want to invest in these new type of investments, but with less risk? Where can we go for reliable information?
This is a big question, I think, that a lot of people have. And I want to start with kind of you, Lori, to outline what we should know from the SEC's perspective, what teachers should know as they're being asked questions about all of these new investment opportunities to many people.
Great. And thank you for the question. It is a great one and very timely. You know, when you're talking about NFTs, non-fungible tokens, and cryptocurrencies, these are new investments. So they're going to be more risky, not less risky. You know, when you talk about investing in stocks, bonds, mutual funds, you know, that's a highly regulated area. We regulate the people who sell them, the products themselves, the exchanges on which they trade. That's not the case with these types of products. I would encourage you to go to investor.gov. That's our retail-facing website. You can see some of the information we've put out there with cryptocurrency, and we are sort of on the cutting edge of what's happening in the markets. Also, when it's the latest rage, if you will, and craze. you just have to sort of be buyer beware. I don't want you to end up getting your education at the school of hard knocks. So do as much due diligence as you can. Research the investment, the people who are behind it. It's always easy to put your money into a new investment. But how do you get your money out of it? And what's your overall strategy? What are you trying to accomplish with this? A couple of years ago, initial coin offerings were all the rage. And when it started making the late night talk shows, we had to take some action here. So we launched howeycoins.com. That's HOWEYCOINS.com. Take a look at that. That was the SEC's initial coin offering. And it's a website that has an interactive experience for you as a teacher, as well as for your students. And it'll take you through some of the questions to ask, as well as some of the red flags to check out as well. Good luck.
Excellent, Lori.
Thank you.
Thank you, Lori. You know, Maggie, I want to bring in Tiffany if I can on this question also, because I know it's one that has come up on Brown Ambition that you've talked about to a lot of your followers as well. It just comes up all the time. It is such a relevant question. What would you say to young people who are more interested now than ever in cryptocurrency, in NFTs? How do you advise, you know, people in terms of what they should be asked, the questions they should be asking before they're trying to invest in these new opportunities?
So one of the things that I tell the people that follow me is that you want to make sure that you have a strong financial foundation, because people will want to invest in an NFT, but then they don't have a budget. You know, it's like putting on perfume, but you haven't quite taken a shower yet. You know, you want to make sure that you have your financial foundation in order. If you were a teacher, you would never try to teach a child to say write before they even learn their letters. You know, so that's what's critically important. And also too, if you really want to be excellent in anything, you know, you want to be a good student of it. So have you done the proper research? Have you put enough time in before putting your money in? If you're willing to invest the time, the energy, and the research, then you can start looking into those more high level and risky investments, because you can still make a lot of money and retire wealthy and have money without taking huge risks. It's possible.
Very good point. Very good point. Thank you so much for your question, Maggie. Appreciate it. Amanda Lucero is joining us now, a family and consumer sciences teacher from Mission, Texas. She started an elective personal finance course that has become a breakout hit among students at Sherryland High School. And Brad, she is curious about the connection between mental health and finances. Amanda, go ahead with your question.
Hey, y'all. It's really nice to be here. Appreciate it. So last month, April, was Financial Literacy Month, and this month, May, is Mental Health Awareness Month. And we find that they're sometimes, more often than not, intertwined. What would be your best advice to navigate kind of topics that are taboo and people just don't want to talk about?
Great question for Brad. You know, as a financial psychologist, this is what you deal with all the time. You said you wanted to talk about it more. Go for it.
Yeah, you know, shame is just the worst thing for us. Like we could all do with a lot less shame. And when you look at the stats, I mean, like half of Americans admit to having a mental illness at some point in their life. And the other half are lying, I think. I mean, I think it's something that we all experience at some point. And same thing with money. Like 8 out of 10 Americans say that money is the biggest source of stress in their life. So the biggest message I like to give out is like, hey, look, you're not alone. If we could take it from I'm ashamed to, oh my gosh, I'm not alone. And we're all struggling with this. And we have had a major shift in our culture. I think a couple generations ago, people didn't have to worry about personal finance because, you know, you had a pension from your company. And I'm sure if any new teachers who are listening, the pension's probably not as good as it was for the people who were employed before you. I mean, we've been seeing those shrink over time. And so now the burden of taking care of our financial lives is squarely on our shoulders. But we just haven't been taught. Like, it's so great that you're teaching this to your students, but I mean, how many of us were taught this in school? So I feel like just we're all in the same boat. Let's get over ourselves. I'd love to talk about all my financial mistakes, just to help everyone feel better about themselves.
I think that's important, Brad. I think you brought up a good point. How important is it for teachers to talk either anecdotally of friends or of their own situations to really bring it home as to the challenges they're facing financially that have a psychological impact? How important is that to bring it up in the classroom or bring it up in the teacher's lounge to your colleagues? And what help can it provide if you are having those conversations?
I think it's incredibly helpful because chances are the other person's going to like breathe a sigh of relief going, yes, I know.
Yeah.
I mean, like who hasn't made a terrible financial decision or a terrible investment? And I feel like it's a catharsis just when we can start talking about it, because again, like 8 out of 10 Americans say that money is the biggest source of stress in their lives. We're in the richest country in the world historically. So this is something that's universal, and all you have to do is start talking about it a second or two and everyone's going to relate, because we're all in the same boat. You're not alone.
Yeah. I find it, Amanda, helpful when my daughter has found it helpful as a high school sophomore to hear what her teachers are going through. The fact that her pre-calc teacher has 3 kids under the age of 5, she can't even believe it. She's like, how is she still teaching me and making up the quizzes and doing all these things? And so teachers being real about their situation, it definitely impacts students and teaches them just real life situations that they're going to have to deal with, or that they can at least be more empathetic about, which I think is so important. So Brad and Amanda, thank you very much for that one. We'll probably delve into that a little bit more because like you said, it's a big topic. It's a big topic. Now let's meet Lisa Dempsey. She's a business education teacher at Greenwich High School in Connecticut. She's been teaching for 25 years, and Lisa helped create a personal finance course at her school, and over 200 students take this course every year. She has a question about rising college costs. Lisa, what's your question?
My question changed a little bit. First of all, I've been teaching a total of actually 34 years, because before I started teaching in Connecticut, I taught in 9 years in New York. I actually am eligible for a New York pension as well once I teach 10 years in the state of New York. My question is should I buy out my years in New York, which today would cost up to about $170,000, or should I go back and teach in New York after I retire out of the state of Connecticut?
All right, so this sounds like a question for the 403B guru, Dan Otter. But Dan, it also sounds like something that might be pretty specific for a New York, Connecticut person, but I don't know. What's your answer?
Yeah, no, I will definitely say that I am not an expert on New York pension plans, but I did a little digging and I think I have some good news for Lisa. Lisa, if my math is correct, and please know I used to be a social studies teacher, you started teaching in New York around 1987 and you stopped around 1996. Is that true?
Correct.
Okay, well, I believe that'll put you in tier 4 of that pension. And in tier 4, you're actually eligible to receive a pension after 5 years of service. So you don't have to go back and teach that 10th year unless you want to. But so hopefully that's some good news for you. And again, this is the kind of question that I would highly recommend you take to a financial planner. And you need to take it to the right kind of financial planner. That would be a fiduciary advisor. This is a person who will pledge in writing to put your financial interests above theirs.
Absolutely. That's great advice, Dan. And I want to follow up with you with a question about where teachers should go specifically. I know you said you want to have an advisor that follows the fiduciary standard, but is there a place that teachers can go where they're assured that this financial advisor has some experience dealing with other teachers?
Absolutely. We have a great resource on the homepage of 403bwise.org. And it's on the lower right-hand side, and it's all the information you need to know about how to find the questions to ask a financial advisor, where to find this type of fiduciary advisor. We even have a fiduciary pledge that you can print out and have your advisor sign. Now, if they don't want to sign it, then you know you've got the wrong financial advisor.
Absolutely. Great advice. And I do have to plug that CNBC also has a financial advisors council. All of the advisors on that council are fiduciaries as well. And you can go to CNBC.com and put in financial advisors council. You'll see the names come up. Many of them may be the same that are on 403bwise.org as well. But absolutely, if you haven't already, but I know you have, bookmark 403bwise so that you know to go and look for a financial advisor. Having that person on your team is so important, and you want to make sure you get the right one. So thank you very much for your question, and thank you, Dan. Amy Plackmeyer is a business teacher in Boyne Falls, Michigan. She has 17 years experience working with high school students in technology, computer applications, personal finance, and entrepreneurship. All of those go so well together. Amy, you want to get panelists' reaction to your question. What is it?
Hello, first of all, from the Great Lakes State. If you could only teach 3 ideas or concepts to your personal finance students, what would you choose and why?
Dan, let's start with you this time.
Sure. Start investing early so you can take advantage of the power of compounding. Number 2, invest with low-cost companies like Fidelity Investments and Vanguard. And number 3, show your students the movie, The Big Short. It'll teach you a lot about market bubbles.
That's great. Yeah, that was a great family movie night. We like that one for sure. Lori, what, that says a lot about my family. Like, okay, we're a money nerd. I got to bring it to everybody, I guess. Lori, how would you answer that question?
As a regulator, I like to talk about fraud, fees, and risk. So when I talk about fraud, nothing's going to derail your financial fitness faster than fraud. And so how do you protect yourself against that? Well, when it comes to investments, the people who are selling these need to be licensed. You can go to investor.gov, and it's as simple as putting in the person's name. If they don't show up in that database, that is a big red flag. And before you turn over your hard-earned money, do some more due diligence. Also, most of the products that are sold are registered. And again, you can do that background check on investor.gov. Now, there are some products that are exempt from registration, but the majority are going to be registered. So you need to understand that if they don't show up in Edgar, then go do some more homework before turning over your money. Fees. Let's talk about fees, because all investments have fees. And when we're talking investing, we're talking putting your money into potentially the stock market for decades. And so what sounds like maybe a small differential of 1% or even less has a huge impact on the overall amount of money that stays in your pocket versus going into someone else's pocket. So take a look at the fees. We have a cost calculator for mutual funds and exchange traded funds, so you can do that side-by-side comparison. Again, doing your homework before you invest will help save you that money and keep it in your pocket before going into someone else's. And then risk. During periods of market volatility, that's when investors experience the most risk. And are you solid in your financial plan? Do you know what your long-term investment horizons are? Can you manage that risk? And one of the best ways to do that is being diversified. And that means that you don't have all of your eggs in one basket. We take investor complaints and questions at the SEC, and the saddest ones that we receive are, I've lost all of my life savings. I invested everything I owned in one particular asset and it's gone. Those are devastating, especially when they come from older Americans who may not have the time or resources to build them back up. So getting off the good start with that, being broadly diversified will go a long way to securing your financial future.
Yeah, Lori, you brought up
Thanks.
such a good point, because so much of financial education is about managing money, building money, and rarely do they get to the point that I think is most important, which is protecting your money. Even if you've only made a little bit, you want to protect every penny that you've been able to manage and grow. And so those points about that you brought up are really well taken. And the investment advisor search function on the website, on the SEC website, is one I go to all the time, because I get pitches from financial advisors or PR companies for financial advisors, or a friend mentions a financial advisor. And the best way to tell if that's somebody that you may want to do business with is to go to the SEC and see if there are any complaints against them. You want to know. You want to know who you're dealing with. So that's something that you really should tell the students as well. And Tiffany, what would you say to Amy's question?
So Amy, the 3 concepts that I would teach: number 1, money mindset. Because no matter how many times I teach a lesson, it's not going to stick unless there's a shift internally. So we can start teaching students as early as possible how to think about money in a way from a judgment-free place, and also in a way from a place of positivity and abundance. That will go a long way. Number 2, they don't call me the budgetnista for nothing, budgeting. Right? So people don't like to hear budgeting, but it is a cornerstone for your financial health, right? So budgeting is going to help you with savings. Budgeting is going to help you with your debt. Budgeting is going to help you with credit. So budgeting. And number 3, learning to earn. I don't think enough people put enough emphasis on that you don't have to have a regular job necessarily to earn, or how to even maximize money where you are. I wish someone would have taught me earlier on. Well, actually, I was fortunate my father was a CFO and he did lead into us about things, but not necessarily learning to earn. As a teacher, I learned that, oh, I can babysit. I can tutor on the side, or now as the budgetnista, I'm a financial educator. So money mindset, budgeting, and learning to earn are my concepts.
Love that. Learning to earn. Excellent. Thank you, Tiffany. Thank you, Amy. I want to bring in James Ruddleschemeyer. He has been an advanced placement and regular economics teacher at Armstrong High School in Minneapolis since 2003. And James is also the author of Barron's AP Economics. James, what's your question for us today?
Thanks for having me, and it's a huge pleasure to be on with you, Sharon. In my summer, on my summers off, I spend a lot of time watching CNBC, and you're my favorite, so it's a pleasure to be here. My question is: all of us teachers have taught students who may have grown up having negative experiences and emotions regarding money by no fault of their own. What strategies could teachers have to reach these students who may not be as receptive as some other students?
Brad, that's a great question.
Well, yeah, and as the son of teachers who divorced and I was low income, I didn't know any rich people growing up. I didn't know what millionaires did, how they thought. And I think what is so empowering is when I started to research that, and I've done my own research, I've read other studies, and we've got it all wrong around how most millionaires are in the United States. And I feel like it's incredibly empowering to just understand the truth. Because when I grew up, I had all this negative beliefs around money and rich people, and it was a big mystery. But studies have shown, for example, most of them went to public school. Most of them are first generation earners, and they're hustlers, they're savers. And what really shocked me is they're not spenders. Like, social media lies about this. Actually, most millionaires describe themselves as frugal. They actually downplay how much money they have. They're not the big spenders. And I find that to be extremely empowering. I'll give you one other stat that is mind-blowing for a lot of the students, because they hear from social media, if you want to become wealthy, you have to take big risks and start a business. 7 out of 10 millionaires are employees in the United States. And many of them are becoming millionaires by investing in their retirement accounts. And so for me, I found that, coming from a lower income environment myself, extremely empowering to realize, whoa, this is something that I can have and something I can get. And on the psychology side too, the thing that really concerns me, because we've done a lot of studies on this right now, beliefs that money is bad, rich people are greedy, money corrupts, these are highly destructive for somebody's financial health. I mean, it leads to lower income, lower net worth, more credit card mismanagement. And so I always try to find examples for those individuals of people who look like them, who come from where they come from, who are doing incredible things in the world and trying to educate people on the wonderful side of wealth. And you can do incredible things if you have more resources.
Thank you very much.
Excellent. I heard people gasp when you gave that statistic about millionaires and where the millions really come from. So great information. Thank you, James, too. Thank you for your question. Moving to West Hartford, Connecticut, Marianne Taft is joining us now from Hall High School, and she's been teaching financial literacy, marketing, and entrepreneurship for over 15 years. She encourages her students to start investing as early as possible, and she's looking for some insights that she can take back to the classroom. Marianne, what's your question?
Thank you so much for taking my question. My question is, I'm passionate about getting my students to invest as soon as possible, right when they're in high school. What advice would you give to a soon-to-be graduating high school senior, 18 years old, who wants to take some of their graduation money and invest it in the S&P 500 index fund? And also, I'd love to know your thoughts on micro-investing apps, which my students have a lot of interest in. Thank you.
Yeah. Brad, you're putting on your CFP hat now, your Certified Financial Planner hat. So can you answer that question too?
Okay, so I'll swear this is not a setup. I know Acorns is helping sponsor this, but I'm actually going to talk about the Acorns app. And by the way, I'm not getting paid to do this. This is just my legitimate opinion. It's a great way to get into micro investing. And I'd also want to educate my students too. The S&P 500, for example, is just one asset class, and that's okay. It's just one asset class though. And so many financial experts recommend do-it-yourselfers, people starting out, look into target date funds. And so I'd want to educate students on that too, where it can give you a broader, more diversification across other asset classes. But the one thing that I really, really want to drill into their minds and just expose them to are the studies around trading and the fact that even 95% of traders on Wall Street, I'm talking the pros who get paid tons of money to try to beat the S&P 500, 95% of them can't do it over a 15-year period. And so I'm always trying to discourage people from doing things that are most likely to not be successful.
Very important example right there, definitely. Thank you, Brad, and thank you, Marianne, for your question. Courtney Poquette teaches business at Winooski High School in Vermont, and she earned her MBA from Southern New Hampshire University. She also trains educators across New England, actually, to teach financial literacy courses at the Center for Financial Literacy at Champlain College. And Courtney, why don't you get started with your question?
Sure. Thank you so much for having me. So my state recently proposed sweeping changes around teacher retirement plans. And I know that this is happening all across the country. And when this happened, I realized that many of my colleagues are relying solely on the contributions they're making to these plans as their primary source of income when they retire. And so we're in an interesting situation with 403B plans being limited in choice and high in fees. And so I'm curious, should teachers rely on IRAs as their first option? What should teachers do to ensure a secure financial retirement for themselves?
Dan, great question, Courtney, about where do you put those first retirement dollars? Where should your money go? IRA, 403B, 457? What do you say, Dan?
Such a great question. I would start by seeing what are the financial companies available to you in your 403B. That's called the vendor list. And then come over to our Facebook group, the 403B Wise Facebook group, and do what hundreds of teachers have done. Post your vendor list on our Facebook group, and our community of teachers will let you know if you have good choices available. And if you don't, they'll be able to offer you some suggestions on how you might be able to add, to lobby your employer to add a better investment choice. I want to point out that not all school districts are bad with do the 403B wrong. Montgomery County Public Schools in Maryland has an outstanding 403B plan. They have one low-cost vendor available, Fidelity Investments. So if I taught in that school district, I would definitely contribute to that 403B. But I do think that every teacher should investigate starting a Roth IRA. That might even be the first alternative plan, supplemental plan that every teacher should start. And the beauty of that plan is you can choose any financial company you want to invest in. You want to use Fidelity Investments? You can get Fidelity Investments. You want to use Vanguard? You can get Vanguard.
Excellent. Thank you, Dan. I want to go to Richard O'Neill now, who is in Claremont, California. Richard, you have a question, I believe, for Brad. Richard, we don't hear you.
One more time. Thank you. Thanks so much for this opportunity. I'm learning so much today, more than I expected. I teach personal finance from a math background, but as time goes by, it's increasingly clear to me that this is more about behavior than it is mathematical models. For example, we're faced with an everyday problem with young people. How do you learn to spend less in order to save more? So my personal interest is to understand where to find models and curriculum and successful practices from the psychological point of view.
Brad, besides your book, of course, where should he turn for this?
I know that is the challenge, and I'm going to try to avoid mentioning all my social media because there really isn't that much that's been done. But I will mention a study that we recently did, and we saw just after 1 hour of this money mindset training and understanding, and essentially what we did is we got people to think about what they were taught by their parents around money, what they learned, what are the beliefs that we have around money, and where do they come from? Because we've done dozens of studies on this too. That predicts your outcomes in life, just plain and simple. Like your beliefs around money, how it works, what you're supposed to do. This leads directly to your outcomes, and it'll impact the rest of your life. Many of these beliefs we inherit from our parents, our grandparents, our culture around us. And again, they're extremely powerful. So we taught people that, we had them get really clear about their financial goals. And that's incredible. If you can get a clear vision of what you want, it's unbelievable what you'll do to go achieve it. And in our study, when we did that, we saw like a 73% increase in savings after 1 hour of doing that. So people went from about 10% to 17% because they understood their thoughts about money and how it impacted them. And they got super clear about what they wanted and why they would delay gratification anyway. It's not something we're wired to do. I mean, we're wired to spend our money right now and consume as much as possible. So we have to override that. And the way to do that is to have really clear, exciting goals. And then lastly, automate, automate, automate. And if that's the one piece of advice anyone could leave with, it's like, get excited about those goals and then use what we call a status quo bias. We're all sort of mentally lazy. We don't want to, it's the reason why many of us have belonged to an athletic facility way past going because the automatic withdrawals are coming out. And so if you can harness that, it's incredible how quickly and how powerful that is towards goal achievement.
Excellent. Thank you, Brad. I appreciate it. I want to go back to California now because Danina Spites Carroll is a first-year teacher at Central Coast High School. And for a first-year teacher, we know you have a question that needs to be answered right now. So what is it?
Hi, everyone. Yes, my question aims to help all the newbies out there, those pre-service and first-year teachers. And my question is just, what can first-year teachers do to invest in themselves?
Great question. Dan, what do you think?
First, start by getting some rest. I taught for 12 years and I was in my 20s and 30s and I was exhausted. So please take care of yourself. Number two, understand your retirement plans now. Have a sense of how your pension works. Look into the 403B and the 457B. I know a website you can go to that will help you with that. And then finally, if you have student loans, investigate the Public Service Loan Forgiveness Program because you might be able to get a significant chunk of your loans forgiven.
That's great advice on the student loan part, especially. Excellent. Excellent. Thank you so much. Vincent Branch from Washington High School in Houston, Texas. Thank you for joining us as a social studies teacher and a personal finance literacy teacher. What is your question?
Thank you, everybody, for this opportunity and for this chance to ask my question. I work in an urban school with a demographic that's about 60% Hispanic, 40% African American, and probably more than 80% economically disadvantaged. So my question is, what are some strategies to make financial education more culturally responsive to all learners?
Tiffany, what do you say?
Well, this is an excellent question, Brad. As someone who lives in a city like that and taught in a city with a similar makeup, one of the things you can do is to bring in what's happening outside inside. So Lil Yachty, he's this really popular rapper, just did this interview where he explained that he spends $50,000 a month to keep up his lifestyle. This is to pay people who follow him around, to pay his driver, to pay for his mortgages. And then he explained that even though he makes a lot of money, he has to continue to do so. You can pull that lesson in and ask your students, well, how could this be different? They have their favorite TikTokers. Like there's a young woman named Charlie. She makes like millions of dollars a year, breaking down how does she make that money? How could she invest that money? How could she grow that money? So take what's already happening in their lives and break it down inside the classroom because they're going to be excited about learning about financial education from a perspective of what they're already consuming.
That's great advice. Great advice. I remember my mother doing that when I was growing up. I'm like, why is she watching what I'm watching? But she did it to bring it into the classroom. It's so important. So I hope that helped you a little bit, Vincent.
It did. Thank you.
Excellent. Diana Mondoro is a business education teacher in Livingston, New Jersey, and she joins us now with her question. Diane?
I am thrilled to join you from the Great Garden State. My question is an extension of the previous question. What financial topics are the most challenging for parents or other trusted adults to discuss with their children?
What do you think is the answer there, Brad?
Well, first of all, you're spot on. I mean, it's a very uncomfortable thing to talk about. And studies show this. Actually, studies show that parents would rather talk to their kids about sex than money. And I've got young kids and I don't like talking about sex. I mean, it's rather uncomfortable, even though I'm a psychologist. And so what I think it really comes down to is that we struggle to talk about what we don't want to face. And it's usually whatever we're most ashamed about. It's usually like, we don't want to talk about credit if we're been mishandling credit. We don't want to talk about investments if we feel like we don't know what we're talking about. And I think that's the challenge, right? And so I have to go back to shame isn't good for any of us. We have no reason to feel ashamed. And we just need to think about, this is all new information for many of us. Again, all the rules have changed, and we're left sort of juggling, trying to figure out, what do I need to know to take care of myself? Because I didn't have to do this before. A couple generations ago, this wasn't the worry. My grandfather didn't have to worry about credit card debt. There was no such thing as credit. Like, he couldn't even get access to it. So all of this complexity is hitting us. And so the more permission we can give ourselves to just be, we're all learning, and we are in our financial situation right now. It's totally predictable based on where we grew up and what we were taught.
Excellent. Excellent.
Thank you.
We're going to move on to Tom Arnold. I have 5 minutes to get through 4 teachers, but we're going to try to get to everybody because I know you have important questions. And Tom from Modesto, California, what is your question?
So real quickly, we've noticed about have to do things early so it can compound and so forth. With the cost of living and college costs continuing to rise, how can our school districts and teachers provide incentives for new parents entering the school system at the young kinder area to begin a 529 or custodian IRS, especially when most Americans basically live paycheck to paycheck?
Lori, how can you do it? Start the 529 plan.
That's a challenge, especially when it comes down to, it's a matter of how much disposable income do you have. So how much money do you make? How much money do you spend? Can you make more? Can you spend less? And that's a challenge that many families face. Now, these products will give you some tax advantages, especially if you're able to take advantage of them early. And that's a very good step towards that. So taking a look at your overall budget and seeing, are there some areas where you can cut? We live in a time of historically low interest rates. So as you're getting your financial house in order, hey, do you own your own home? Have you refinanced at these lower rates? Maybe that would free up some income. Also, there was talk about the gym memberships. Well, how about some of the streaming memberships? How about some of the cell phones? How about some of the cable bills? Have you renegotiated your insurance? Have you gotten a better price on that? Start taking a look at that. Maybe those are some areas where you can free up that income to put this other money aside for your child's education. However, you have to remember, don't do this to your own detriment, though, because you need to plan for your retirement also. And when it comes to your retirement, you can't take a loan for that. And your children can always take a student loan to go to school. One thing I did with my nieces, instead of buying them that electronic toy or gadget that was going to end up maybe in the bottom of their closet in a few months, I contributed money to their 529 plans. And maybe that's something you can get your family and friends involved with and sort of make that, a way that you're planning for your child's financial future and make it a family thing.
Absolutely. Great advice. Great advice. Thank you, Tom. Jill Hughes in Wisconsin. You've come all the way from Wisconsin to join us, and this is your 32nd year as a business and information technology teacher. Thank you for all that you're doing. And what is your question?
Hi, thank you for having me. I'm so excited to be here. Because students are graduating from college with unprecedented student loan debt, how can we help these students and their parents better understand what they're signing up for before they get themselves into this debt? And if they do graduate with this debt, how can they best pay that off while still setting aside money for retirement?
Brad, what's your answer?
As somebody who had $100,000 in student loan debt himself, I'm really happy to talk about this. So college is a business decision. And unfortunately, your kids are being taught on social media that nobody should go to college, like college is for idiots nowadays. Meanwhile, the Department of Labor says that the average college grad is still going to make $1 million more during their lifetime. And so this is really important information, but your major matters. And so the Department of Labor also will show you how much money people are making on average who come out with those degrees. And so I think that research is super important. And then on the paying the debt side, you're going to feel richer than you've ever felt when you get your first job. And so what I really encourage people to do before lifestyle inflation kicks in, tackle that loan. And for me, I paid off $100K in 3 years by paying $30,000 a year at it. And I just lived like a total pauper, which I was used to doing. So if you can go in with that mindset that those student loans don't have to ride you the rest of your life.
Absolutely true. Yeah. Thank you, Brad. I appreciate that. Now we're going to stay after class for just a few moments. I feel like my daughter's, psychology teacher saying we're prepping now for the final exam. I want to get through the entire lesson plan, and we have just a couple more questions. I hope you'll bear with us as we get to every teacher who has a question for our fantastic panel. We're going to go now to Ambassador Mitchell, and he has a question for our panel. What's your question?
Well, I'm so excited and I'm so glad to be here. I conducted a study to examine the financial literacy for first grade students. And we had two main questions. How well could first grade students differentiate between needs and wants? And how well did they understand the value of money? It turned out that most first grade students could differentiate between needs and wants, but there wasn't quite there an understanding the value of money. I believe the foundation for financial literacy should start as early as possible, especially if the child's cognitive development supports it. Now, my question is, what is the most effective way to implement financial literacy in middle school? Is there a model currently available, and where can I get the money to implement it?
Great question. Great research that you're doing there at Missouri State University. And Tiffany, you have done this. You've created a financial education curriculum in New Jersey. Tell us what you've done and what should Ambassador do?
Yes, Ambassador, thank you for that amazing question. Yes, I work closely with Assemblywoman Angela B. McKnight to write a bill that is now a law in the state of New Jersey that middle school students must have financial education integrated into the classroom. It's called, well, I call it the Budgetista law, but they call it A1414. But here's what was super important: the word integration. And all of us who have been educators before know what it's like when our educational day is disrupted, like stop, money time, so it can be very disruptive even for students. So instead, I was showing teachers, how do you integrate financial education when you're doing art? Maybe we're painting savings boxes. How do you integrate it during literacy time? We're integrating financial education books. How do we integrate it during math, which is a little easier, or social studies? So integrating it, making it part of a lesson you're already doing. That's going to be critically important. I also agree that financial education should start as early as possible. I taught preschool. My 3-year-olds and 4-year-olds were getting age-appropriate financial education. They used to pick pennies up and bring them to me, and we started a little penny jar, and I told them that we could save and help other people who needed help. So it can start as soon as children start saying, can you buy me? Not just can I have? And here's some tools and resources that you can use that are free. So Mint. So if you've heard of Mint, they have something for adults. That's great, but they also have a free financial education tool for students and parents. Choose FI Foundation. They also have this amazing financial education curriculum that's really robust. And Kids with a Z Count. That is another amazing tool that you can use inside your classroom. They encourage people to use their curriculum inside their classrooms.
I hope that helps you, Ambassador. Great
right.
answer. Great resource with it that you just heard from. We want to go lastly to West Orange High School in New Jersey, and we're going to talk to Jason Lamont Jackson, Senior. And Jason Lamont, I have to tell you, I already have a student that I've interviewed that is so looking forward to taking your personal finance class at West Orange High School. She's a freshman. She wasn't able to get on the schedule this year, but she's looking forward to it. She's been taking financial education since middle school, thanks to Tiffany, and is looking forward to your class. What is your question?
Well, thank you so much. And again, I'm so grateful to be here. As non-licensed financial planners, what would you suggest educators do to get to the families of our students, right? The students are the first to learn about financial literacy in the classroom, but the families are not. And so that topic of financial literacy may be taboo. What would you recommend we do to get outside of the classroom?
Yeah, it's a very good point. And Tiffany talked about it a little bit. Dan, what is your thought on that?
For bringing parents into the classroom?
Yes.
And then bringing the conversation home.
Absolutely. I think you can give assignments that involve asking parents about, financial questions. Have them, talk about what it was like when they were growing up, maybe their first job, maybe how their families approached money. I would begin it that way. And I think you have to be cautious. You don't want to make it threatening. I think you have to start with kind of some basic questions.
Yeah, it's true. starting with those basic questions is key. You know, I feel like I've missed the bell here, Jason Lamont, and I've gone over, but I wanted to make sure we got your question in, and I wanted to thank you for what you're doing in West Orange, because that is a community I have spent some time reporting in, and it's really been interesting to watch how much the students really appreciate what they're learning and are literally taking it home and trying to do some on their own and work with their families as well. So thank you for being here with us today. Appreciate it.
Thank you.
And I want to thank everybody for attending this tremendous event, Invest in Teachers, Ready, Set, Grow. We all love one another. You know, I love teaching. And even though I am not one of you, I feel like I'm one of you because I grew up in a family of educators. I really want to thank also our partner in all that we do with Invest in You, which is Acorns, and introduce to you Kevin Hooks, who is the Chief Community Officer at Acorns. Kevin, thank you for being here and for working with CNBC on this really important project.
Thank you, Sharon. This has been absolutely fantastic. I appreciate you all allowing me to participate. And teachers are so important to me and to Acorns. When I was in the second grade, I was identified as gifted and talented, but my teacher noticed that every day I would come to school lethargic, but it was because I didn't have enough food to eat at home. And so as a result of that, she would sneak me granola bars. And 42 years later, I am so excited to be able to pay this forward. Every teacher today who was able to ask a question, we're going to set up an Acorns account and fund it with $50 for each one of the teachers who asked a question. And that's just my little way of paying it forward. 42 years later, I'm the Chief Community Officer at this great organization called Acorns, and I'm so excited to be here. I love what you guys are doing, and thank you for all of your efforts to help us become better people.
Wow, thank you, Kevin. That's tremendous. That is really wonderful. And thank you for your support of teachers. We really appreciate everyone who joined us today, especially our experts. Thank you so much to Tiffany and to Brad and to Dan and to Lori, and to your wonderful insights and really thoughtful advice for our teachers. And we also want to thank Nan Morrison of the Council for Economic Education and Tim Ranzetta from Next Gen Personal Finance for partnering with us on this important event. And keep in mind that the video from this event, the full video, will be provided to nearly 1 million educators across the country. We're really excited to do this along with CNBC, to do this along with all of these amazing leading organizations in financial education. And if you want to watch some clips from today's event, please go to cnbc.com/investinU. And if you would like to participate yourself in our learning series that we've created with Invest in You, go to cnbc.com/money101, and you'll become part of an 8-week learning series called Invest in You Money 101. And we'll talk a lot more in that series about things that were discussed today that will be great for you as teachers, but also for your students. Thank you again for taking the time to hang out with us in the virtual Teachers Lounge. Thank you for allowing us to go a little bit over time because there's so much we wanted to get through. And I really look forward to joining you the next time. For CNBC, I'm Sharon Epperson.